There it is. I really should pay attention to that. Okay, let's back this up. Let's back this up really quick. Okay, the bears come into the market right through here. Sample. They get the volume, and the bears are looking, they're just sort of, what can we do here? The market switches back, and this right here, you see how the volume happens right there? I'm going to actually use the crosshair to show. So right here, you could see this sample happened right here. Boom. Let's zoom this out right here. Okay. So here's where that volume happens here. Here's the sample. So we have the bulls and the bears come in. The bulls do something here. They are able to hit the price up there. And looking over here at tension, you can see that there was like this slight response out of the bulls. Now what's important here is that the bears are being predatory. The bears are waiting. They're like laying in wait, because if the bulls mess up and they don't hit, there's going to be elasticity, and that'll be driving this down. So that's what the bears are looking for here. And especially with this move up higher and seeing like almost a response, and we get that again right here. Look, it moves up, almost a response. It's like they were almost hitting. So not quite a nod getting out of the way, but not quite enough to move tension. And the whole objective of picking up liquidity and driving the market is to pump probabilities in your favor. So what's interesting about this is that we have these slight moves, but no real work got done. We didn't see tension make, moving in the direction of the bulls. We didn't see them really get this work done. So yes, they're here, but they're being ineffective. And we see this every once in a while. And if you think about it as, why would the bulls do this? Why would you sort of impact the market so that we don't get elasticity? Why would you do that? Well, I think the objective here is that we're not really seeing an elastic market show up. But this is some super high prices. I think what the market's trying to do here is pull in some bears. I think they slightly hit. So the bulls are like, okay, we are here. And the bears are getting really enthusiastic. If you've been looking at longer term charts, this is a very attractive. I think a lot of bears would love to short here and call the top. So I think the goal here is to just use a little finesse. So it moves up. We do have a little bit of an impact again. These are slight. And we do have some impact, these bears here. When it comes down, you can see that it took a little while, but there was a little bit of an impact. So these players are being careful. Then we have the toothy market. This is the teeth. You have to be aware of this. The teeth is a thing that happens a lot. And that's these guys here. Market wants to pressure them before making any advancements. As the market moves down, you can see that right here, we got this to cross, it was a switchback. So there was a bearish position here, and then we got a bullish position here. And then it dove after those stops as well. Some trapped orders and moved up. This is really tough trading if you weren't anticipating teeth. It's just, you have to anticipate teeth all the time. If you were saying, all right, I want to see some teeth and they're going to pressure this, and then you saw this here and you're like, all right, some teeth, keep the teeth in mind. And then we see this low happen. Then, right through here, you're going, okay, I see what's going on. Now, this is important because up to this point, this is pretty standard stuff. We get the bulls and the bears. The bulls are being a little sneaky. We see this, gimmicks and devices and all sorts of things, trying to get some bears into the market. So up to this point, that's what's happened. Pretty standard stuff and really slow, if I do say so. You can even just looking at tension, you can tell that this slowed way down. It's just not doing a whole lot. So at this point, you have to ask yourself, okay, we got our teeth. We pushed out a lot of the smaller hands. What's the goal here? The goal, of course, is always to trap out your enemies and to pump tension and get as much advantage along the way. That's what you want to do. we have bears likely sitting here and probably a couple here. I don't think that they got knocked out in either of these pushes up. I don't. Looking at tension, this doesn't look like we knocked. So we have some bears in positions that are positive. We pressured the bulls into the lows. Okay, so we're laying out the landscape. Pressure the bulls, and now we say, okay, are the bulls ready to hit? Yes, they're ready to hit. We got our pressure now. We're ready for some activity. So I think right through here, good buying. And then right here, we have a little bit of a switchback, nothing amazing. And what? Where are the bulls? Well, you guys got everything you needed. You have people to trap out. Why didn't you hit this? So I think through here, this was looking pretty good if you're trying to trade the teeth concept, looking at the structure. And I think that's why it's moved so swiftly. But then right here, once we have everything, you're sort of anticipating this to make its way up, turn this position upside down, and then turn this. That's what you're expecting. We need to turn these upside down. We've got the teeth, time to get the job done. And nothing happens. So there's a big question mark. Well, the market leans back. And right through here, you see this cross right there? Bulls, another bullish sample. And you're like, okay, another bullish sample. But this is a huge problem now. Because we had a spot here where that the bears, or sellers, not bears, people saw the momentum move up a little bit, slosh back. We have situations going on. There was absolutely reason right here for the sellers to come in and sell, providing liquidity to bulls. I absolutely think this was a great spot for the bulls to come in, but the no response makes me really suspicious at this point. I do not like to see everything line up really, really well and then get no response from the dominant party. So you should be looking at this as like a late nod. This is trouble. Now, 25% tension right here. It's not amazing, but there is some room that the bears are eyeballing. They want to drive this down, especially off of this high, which I don't have a chart that's zoomed out enough, but it sort of looks like a little bit of a double top, I guess, maybe. Zoomed out on the ES. It kind of looks like maybe that from yesterday. And I think a lot of bears are looking at that going, oh my gosh, the risk here is amazing. And they might get lucky. So this nod here, not much response. I think there's a lot of bears who are enthusiastic. This sort of surprised me. We get another sample here and you can see, again, nothing. So this market is now operating from here and here. I think those positions lined up really well to just get wrecked. But then the bulls decided to just do nothing. And so the story at right about here is now all different. We have the bears thinking, oh, we've got some elastic. We've got a little bit of room to run. What can we do? The best thing that the bears could possibly do is to get this close as low as they can. The reason for that is you don't want any of these bullish positions having the potential to hedge or whatever, or do anything that could make it hard to run them out. You want to keep them underwater. So I think that's the mentality right now. These bears are going, all right, we finally got our nod. There was some hope here, hoping to get elasticity, a little bit more hope. So it was like +1 for hope, but it was just pushing teeth here. And now we finally get the nod coming in right here. And that makes all the bulls skeptical, in my opinion, thinking, oh, so we need to step back and wait until tomorrow when elasticity potentially runs us down. And I think, yeah, that's what's going on here. So the bears are enthusiastic. And you could see, if you remember about a nod, first you get the nod, right? So first you need to get your nod. Then you need a position. And so one of the mistakes that you might make on one of these is to jump in too early or get in before there's a position. And, you know, if you see it coming, you got to do what you got to do. These can be a little bit difficult to participate in, especially with this structure. They already have bearish positions now, pretty close to the highs. they can operate from those, and it makes it hard to jump in after the fact. And this is one of those structural things I think today's just fundamentally difficult to really participate in much, because the bears didn't know that the market could be bearish until after it was hard to play ball. That's tough. So if you didn't already get in, this is going to be difficult. It looks like the market's trying to lean up right here into the close and potentially get a bearish sample off of one of these. But I don't know that that makes a ton of sense. The trades would start to get a little crowded. We have two positions that sort of sneakily, got in here. I don't know that there's a whole lot of great opportunity now. If were watching this and you're able to pick up something after this, if you got in maybe or I would say in this range between these two positions. But personally, I don't know that we're going to get it. I think that the bears need to keep the market down, keep the bulls underwater, if there are any. And then tomorrow, I think, if we get like this kind of thing, boop, and then they can get some sort of bearish sample somewhere and then pump the market down as much as they can, down to 0. This is the scope the bears have available. This is what they're eyeballing. It's what they want to do. The bulls just, I don't know. Why? What? It was just like they weren't sure, and then they quit. So I'm not sure what the deal is here, but it looks like they were just going slow and then decided it wasn't worth it. Which I guess if you're looking for better positioning to buy into the market, this kind of behavior might make sense. You don't really dump your longs and then you want the market to come down, so you hand it over to the bears, who hopefully can bring things lower so you can get better prices. That makes sense. So this is where we're at. The market is leaning into, or starting to move towards, elasticity. And I don't think that was really known until right through this here. I think this is the time when you could have gone, oh, okay, I see the elasticity. The reason I don't think that right here was great is because there was a little bit of response. And if you were watching this in real time, you'd have said, it's moving up here. It just wasn't much. So, and the other thing to point out, so when you're doing this on your own, the question is, did you get any work done? I mean, look at tension moves, tension. It's like, well, you guys kind of did, but you didn't get anything done. Like, they didn't trap anyone out. So yeah, they kind of hit, but they didn't get the work done. That's the trouble. That's the thing I'm picking up on, and I was observing, was this weakness that they showed. So the bears were predatory, and now the bears are in a position where they sort of just were laying wait, take on some risk. And that's how we got to this point here. Now I want to take a look over here at these options. I just saw this, which this is new. This, I've not really seen this. These are a bunch of in the money puts on the SPX. Now, when I see in the money puts, I typically think that the market is hedging, but if you take a look, I mean, the best bullish position was at best, it's like here. If we switch over here, I'll scale it in a little bit. You can see, what is that? This level? I mean, the point here is that you want to like buy here and then hedge when it's at the highs, so that your premium doesn't, you can convert your profits into paying for premium and never lose money. These aren't that. So somebody picked up a bunch of puts, and with relation to where I see liquidity sitting and how this wasn't really that. Maybe some major hedging from bigger positions earlier, because this market's just been, perhaps that's what it is. I can't tell you where they are, but I don't think that these options right here, which are going if you have any options tools, these are going to skew. They're going to skew your output data, and I don't think this is hedging like you would expect. I'm not sure what this is. Maybe somebody who's super bearish just bought a bunch of puts and they're anticipating the market to get bearish instead of hedging. That could be it, especially since we did just see elasticity and then we see a bunch of in the monies. I like in the money puts better. I think that they pay better because they get to 1-to-1 faster. So I'm gonna be paying attention to this. I haven't seen any behavior like that in ever, as long as I've had this tool, which isn't that long. But we see out of the money calls all the time, like this. Oh, not this. So interesting. Moving down here to our volume profile, you can see that today, breaking outside, got under the point of control. Not a super well structured, like this just doesn't look super structured. It was really slow. Just a slow day, not a ton of volume, not a ton happening here. So we push the upside, push the downside. And if you just said here, we're at the value at the low, we go up to the value at the high, we're at the value at the low, halfway to the point of control, back to this is very rangy looking. I don't see a whole lot of great data out of volume, the profile. I don't think that this is the kind of day where volume profile screams wonderful things that you can trade. It just doesn't. Yeah, so I think that's where we're at. We have the bears who are looking at elasticity. They want to keep this down at least into the close. I think there could potentially be some rises overnight. Remember, bears like this kind of thing. So if you're a bear, this is what you expect your trade to look like. Bulls like this kind of thing. It's like they've got curvature to them. Bears are like, wait, everybody now. So I think driving this down into the close is useful to keep that advantage that they have. But overnight, I would expect, the market to sort of dance around, maybe hit the VoLTE-WAP a couple times or something like that. And then free market or something. We're going to have to figure out how to get, I think, a bearish position right off the open. If the bears get everything they want, they get one trade right off the open, and then the rest of the whole trade's going to happen, and there's just not going to be a whole lot of room to think. Those are effective because they happen quick, and if you're not ready for it, you don't get another chance. And that's what bear trades look like. So, if the market opened even like here, it gapped up a little bit, we'll just say, you get your trade and then it's just never really gives you another one. And then you could try and get into a secondary position or something later on. But I mean, the meat and potatoes is going to be there. Now, you just need to make sure, okay, I want to make this really clear. Make sure you don't ignore the bulls. Now, what I mean by that is not pay attention to everything they do. What I mean by that is if you get a bullish sample like this, let's say, and you see tension move up and price moves up out of that, you need to be very concerned because this is elasticity, not dominance. It means that the bulls moved out of the way and said, you guys can have this for a little while. So if the bulls say, hey, you know what, never mind, you need to never mind. You got to get out. But just seeing a bullish sample is not going to be enough. You're going to need to see the bullish sample. Then you'll need to see, prices doing whatever. And then you need to see a bit of a price response. And then you also need to see tension. And you'll be like, oh my gosh, they're hitting. Dump. Don't hold. It means that the bulls are saying, never mind. This was far enough. We'll go ahead and take this off your hands now. So that's what you need to be aware of tomorrow through the first couple hours of the day. At some point, the bulls want this back. So if you see the bulls trying to take it back, don't ignore that. But just because the bulls get a sample doesn't mean you should go run for the doors. There's a contract here. The bulls said, yeah, we'll move so you guys can drive it down. So of course, if things come down and the bulls get a sample, the expectation is that they'll do nothing, and you should stick to that expectation until they do something else. So that's what you're looking for tomorrow. A bearish sample probably won't give you much. And then if the bulls just get a sample and they hit and you see them impact tension, remember, they have the right to do that. It's just you don't expect it, until that you see it. Don't see it until you actually see it. I think bringing it up can sort of get it on your mind a little too much. The point I just want to drive home is if you see them hit and impact tension, they're taking back what belongs to them, and that's why you need to be respectful of that and don't ignore that. Otherwise, I expect them to stay out of the way. And the goal here, overall is to get this down to here. Not through, to. These are different. To 0. Then once you get to that, then the bears are going to go, can we get this through 0? And that is totally different. It's a different thing altogether. Just getting it to 0, because then the bulls would be like, all right, we've extracted all this stuff, and then they buy in and they get the best price with the most upside potential because they can drive tension. So this works out for everybody. And here's the bears doing what they can. They're pushing it down, and I think this is reasonable. They got to push this to keep it in their favor. Tomorrow morning, just know what their goal is. Their goal is to get this down to here, unless the bulls decide, nah, that's all right, we'll take this back. This is ours now. Okay, so brief overview. We had bears coming in saying, maybe? And the bulls saying, maybe? Gentle? Finesse? And the bulls give the nod right through this section. And then the bulls get, I don't even care about that spot right now. And this, we had this like lingering bear, which I usually talk about this scenario as predatory. This is, when I say predatory, I mean this. They got in, they laid in wait until the scenario played out. They got, and now they're attacking as much as they can. I call this whole thing predatory. So if you ever hear me say, oh, I think the bulls were being predatory or the bears were being predatory, this is what I mean. That they got in early before they were ready. This is an eager bear. They got in before the nod. They were very eager, and then the nod happened. And at this point, I say predatory. So they're wrong here. And then the bulls miss, and now they're made right. And then I'm like, oh, they're being predatory. Up to the nod, I call that eager. They're eager bears because they're getting in before the nod. They're jumping the gun. They're going to get shot in the back, and they should have. I think that they should have. And the fact that these bulls right here didn't shoot this up to here and wipe these positions out should tell you something. That's important. Like, why didn't you do that? You guys had everything you needed. Why did you do it? So I want you to understand the terminology here, so that when I say predatory, when I say eager, you kind of know what I mean. I know this is just like insanity, but that's what I mean. So our lingering bearish position is what is driving this down. So if you're wondering, this is where I think they're operating from. This is the bearish position. In fact, I'll mark that because this is the highest spot the bears have, and this is where they're trading from. Right there. So if the market does get picked back up by the bulls, you can bet this is the very first place the market's headed to, right there. Yeah. So that's where we are. Matt says, can you view what it means when we gap and go like on Monday, but tension ends up declining? Let's take a look. There's nothing else to do, by the way, to the close. So I mean, it's gonna. So this is yesterday. Matt wants to know about the gap and go with tension declining. Right here. Boop. Big old gap. While tension went down. Okay. This is an interesting situation because if you don't look at it as this is a signal for price direction, you think of this as alleviating the risk, it changes sort of the way that you talk about it. Again, this signal, I say again, but signals right off the open, I don't usually look at unless they were highly anticipated. So if tension was headed towards sampling all day, closes right close, and then samples the next morning, I'll look at it. This, no. There was a sample right here. It sort of moved away and came back. This, I'm not looking at this. Now, one of the issues that decay still has that I haven't resolved, you can see right through here. There's no intra-bar data, meaning that at some point, decay was under 0. So this is a difficult thing, but by the close of the bar, it had flattened itself out again. This is something that can't be resolved currently with the current version of decay, unless you're watching it in real time. Decay sort of moved around here, and this is our trapped order. So this, nope, I don't look at that. It was decay that was down and up and down, and then it flattened out by the close, and then we got our trapped orders to get our bullish position. So looking at that and then moving over here, you see it took a little bit of time, boop, 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 and then right there you see how tension moves up just a little. And this sort of looks like today, where the bulls had a position and they just sort of slightly impacted tension. And the most important thing that I look for is tension's response after the signal. That's the thing that I look for the most. But like today, they didn't really get any work done, did they? So they were able to get prices up, but after they hit and impacted tension, down. So roll this forward a bit and you say, well, what about the bears? Well, decay moved up off of 0. You know, at some point it was down and then went positive. So the bears didn't really get a sample until right here. And you can see that the bears impacted tension. This is important because we could see the bears were here and we can see that tension was moving lower and that the bears are going to be here. There are, I think, absolutely bears sitting right here at this level. Let me get a little closer to our market. They didn't do a great job with impacting tension once that finished up, or sorry, price, you can see just not much. But in terms of tension, you can see tension moving down. And this is important because it means that the bears definitely are impacting the underlying structure. So this is tough in a little bit different way, because if you're looking at the overall impact, like you guys didn't do any work, which definitely matters, like it does today. The issue is that why is it moving lower? It has to do with the bears in the market. And I think that there's two reasons for this. One, because I think that the bulls are deleveraging. Deleveraging isn't where that you cover your position. It's where you unwind insurances. You maybe move this over here, rotation. I think of rotation where you're moving stuff around. I think this encouraged this, and I think that a lot of bears decided to jump on board here. But if you want like a rule of thumb, this is just what happens. I think this was stupid. I'll tell you why. The bears were allowing and helping unwind the risk in the market without getting an advantage in price. So I think it was stupid because they assisted the market in having support right through here. And the reason for that is that all the positions, the bullish positions that happen through here, now have less counter pressure. That's what happened. They alleviated some of that. And I do think that the weekend, it was a longer weekend through here. That probably played into why people were deleveraging. I don't think people wanted to hold over a long weekend. I sure didn't. But I think that's what's happened, is the bears just assisted. I don't know why. Why? Go ask your bears friends. Why did you guys short on Thursday? I think that bears started trying to build positions here and then started trying to sell through here. And the question is, what did the bears seem to see that made them want to help the bulls get rid of some of the tension? I don't know why they did that. But that's the way I interpret that. When it comes down to trying to figure out a rule of thumb, and I don't want to ramble too much about it because I don't want to throw out too many ideas. Basically, think of this as the risk, and when you have these just really opposing lucky bulls. They were able to drive price up and the bears helped deleverage. Now, you can't really see that unless you get into the sampling. And there wasn't a whole lot that happened yesterday, but we marked them out. The bears came in. And up till that point, I mean, everything looked just like, it was a pop-up. Is this going to come back down or what's the deal? Bulls just won. And the bears from this point higher just paid. They were just generous. So that's it just happens. I don't know why the bears did that, because now the bulls have more upside. And maybe that's why today was a little bit like the bulls are like, okay, and they, it's definitely if you're a swing bear, you really want this to come down and close that gap, because I think there are people who shorted here and then decided to double down or something here. And in general, I think that's what's going on here. But to really interpret that, you got to just drill down to the liquidity and take a look there. Outside of getting the nitty gritty of the narrative, they got lucky. The bulls got deleveraged, which I think that's what happened. For some reason, this is definitely a day to think about. I'm trying not to say like anything too declarative, because I don't really have like a straight rule of thumb for this type of situation. I look at the context, and that's how I kind of come to the conclusions about what things mean and what things don't mean. Ooh, this is not, look at that, right at the bell, but they were able to keep it down. You see that? It popped back up. Interesting. And look at where they got it down to. Right there. That's the position we just marked out from yesterday. They drove it right to the back side of it. That sucks. Because if you're a bear holding from yesterday, you definitely didn't close, because people who are in losing trades, the market will come right back to your break even. You don't cover, and then it stays negative. So that's not a good thing. Nonetheless, same condition into the close. We still have elasticity is looming for tomorrow. If the bulls came in and they decided to buy, their very first target would be here, and then they'd want to push to a new high to pressure out all these positions. I think we just established that those bears are still holding, so we have these guys, we have these guys to pay, and then we'd have liquidity up higher. So the bulls really, they have everything they need to drive a new high. I wouldn't mind some elasticity, and we see this come down, but man, I am really skeptical the bears are going to be able to run elasticity. I'm skeptical. I have hard. I'll need to see it. I won't be shorting this because I'm skeptical. So yeah, that's my opinion. Okay, options into the close, nothing new, but this I think is a really interesting position. Again, sorry, I'm just looking over charts, see if there's anything else. All right, last thing as a note, I'm going to be pushing out a new version of tension later on. So if you have tension, keep an eye on your email for the update. I just fixed a couple of things. The projection value. So when you have, actually, I'll just explain it real quick. If you guys are paying attention, you have it. So what was happening was you get this thing that would accelerate forever. And so I sort of cooled it off so it doesn't accelerate forever. And then also you'll be able to plot historical projection values. So if this projected to, well, it'll be intraday. So if this plots to here, it'll look something like, whatever the projection at the day was. So you'll be able to plot what it looked like. So you can kind of get an idea of how tension looked when you're looking at a historical chart. So if you see that tension, the historical values are like up here, then you'll say, oh, well, at this time, it looked like tension was going to go up because it's up. And then you'll see times when it switches down and you're like, oh, well, it started to look like it was going down. And the goal is to kind of give you that reference frame so you can look at it and say, oh, well, during this time, we were thinking it was going to go higher or lower. So I fixed that up, cleaned it up, and then in the settings, you'll be able to do this. So right here, you can turn on the projection, off, on, with the history, or just the history, and tinker around with those if you want. So keep your eye out for that. Is there a deleveraging evident by the divergence on stat ADI? You know, I did see that. That's a pretty swift move on the stat ADI back to 0. So the way I was looking at the stat ADI, which, let me pull it up. I don't actually need this. I need the pop out. The way, when I see the stat ADI move back to 0 like that, I think of it, the way I was sort of interpreting it was like a possibility space move, meaning that when we're up here, if the market gets shoved higher, we're going to run into these upper levels really quick. And then you have a long weekend or through here, this weekend, wherever it's right here. And then you see this move all the way back down to 0. We just extended the amount of room to the upside. Though, now that we're at 0 and it moves down, we could move to the downside. So I think that while you're up here, you don't really expect a move down to the downside, right? Like you're not like, oh, it's positive, it's going to reverse completely. But when you get to 0, suddenly you're like, well, you know, now we're sort of at a balance. We could tip down or tip up. And so I think of this as like an increase to possibility space. We're right up near the high, and now we're right in the middle, and the downside becomes plausible. The upside becomes more plausible. And I think that's the way I was looking at it. It's the statistical location of the advanced decline. So even the intraday, this is not the advanced decline. If you turn on the other one, the yellow one, if you have it and you put on the 24 hour, so there's a 24-hour one. When it's solid, that's the actual advanced decline value. And then during the overnight, it's the statistical. Well, of course, I got interested in that. And then I thought, well, what if we don't do the actual value, which is statistical all the time? So there's the 24 and there's the stat ADI. And so this one's just the statistical location. So if you think about that way, you think, oh, statistically, it sort of went back to 0. And we have this room to run. So that was the way I was looking at that. I did notice it, and I did take note of the fact that it was so smooth. I was like, gosh, that just really moved, didn't it? Which is interesting because the tension you see moved there, that was through here, and then this did that. But I think it's just broadening out our possibility space. Another thing to notice, I mean, our best fit vector has been green. We're right on the other side of one of these trend lines that got set here. What are we at? The 6th. So this is only, there hasn't been a red bar the entire, it's only 6 days in. We have just seen green, 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 green. So usually after, I give it like a week, like at least 7 to 10 days, you know, a week, 2 weeks, this really sets in and usually does a pretty good job. The first day or two, it'll flip-flop a little bit. But remember, it resets right here. These are all set in stone on day 1. And these, I don't know why I'm telling you about this. You guys probably already know. These are the statistical trendline levels calculated off all the data from last month to give us the best idea of where trend lines will be. So we're right on the other side of this, and it looks like it kind of got above there and is just hanging out. And so that's what I see this as green. I see this as increasing our possibility space. You can see the bulls have not lost control of this, though. If we do get some elasticity, you know, we could see the market come down, and then the bulls could defend themselves a little bit. So longer term, all these things look still bullish to me. I don't see anything changing direction here. I think the first thing I would probably, if the thing that tends to happen at highs or lows with this indicator is this kind of stuff. This is sort of a turning point thing that you see. And the way I pick it out is I don't mark it. You have this experience where you check tension and you're like, it's up. And then you come back later on, you're like, it's down. Okay, we're down. It's up. We're down. It's like you start to have this feeling that it's like unreliable. And it's this sense that you'll get about the daily tension that gives you a heads up that markets are at a turning point. And you'll see it. Like it'll be just solid, 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 and then you get this flip-flop. And then that gives you a sense that you're at a pivot. It doesn't necessarily mean it's going to reverse. Oh wait, I can scroll back. So this is, if you're looking for where's the top and stuff like that, so here we go. Here's a section that does it, green, 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 green. And then right through here, it's like, oh, it's down, it's up, and they defended, cool. And it's back down, it's like, you're back to zero. I was hoping you would be stronger, and then it flips right here. And I remember going through this, right through this section, you get this like, you want to see it sample and then stay, and then go back to being strong. And this sampled, went, and then it's weak again. It's like, are you going to sample again? And so through this area, if you're watching it in real time over and over and over, you start to get this sense like, I feel like it's just not holding together. Right through here at the end of this one. So you see it's green, 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 and then right through this section, you have sample. It's like, yay. And then the next day, you're like, what? You guys lost control of it again? And so as you're going through this, you're like, I feel like that should have worked. And then you have some struggles, and yeah, it moves up, but it's like back and forth, and you're not getting that nice sample that you want. It worked. It was a great sample, but you wanted to see the sample, and then you want to see price continue while it stayed up. But it flip-flop, and you get this sense about it where you're like, and then things can change direction at that point. So right now, we're not quite to the point, but price can be pretty aggressive, but that's the thing to pay attention here is like you get these samples, and then it's like, why isn't it quite working? And the next day, so you have a day or two of flip-flop. That's how you pick out a turning point with tension. The easiest way, you start to get this experience where you're like, I'm not sure that I want to trust daily tension. So we see that's a pretty common thing to see there. So I point that out so we can go. So right here, if you're looking at this to say, well, is this bullish or bearish? That's one of the general things that I'll look for with this. Is it just starts to be unreliable back and forth kind of thing. And this is one of those indicators I really like. I don't use it as much as I thought I was going to. I thought you guys could tell me. I don't know if you guys use this indicator a lot. You can let me know what you think. I built it. It's time versus volume, and you can see right here there was clearly more volume higher than there was lower. So the expectation is to see it move higher. It's sort of playing out that concept that I was talking about, that I talk about a lot with volume profile, which is the market wants to find more and more volume at further and further prices. And so you'd say, well, we found all the volume up here, and then down here all we got was time. So it spent a bunch of time here, but it wasn't getting you see that? It wasn't getting as much volume, but it was getting a lot of the time. And so you think to yourself, well, then the market's going to want to go back to where the volume is. It wants to get away from time and go to volume because of commissions. So that's the idea behind this. That's why it's green, is because you can tell that there's more volume at higher prices and more time at lower prices. But you guys will have to let me know if you like this indicator. I haven't used it as much because it's on the live charts, and I tend to look at these for a wider scope, and this seems to be, I don't know, it's like day to day, but I don't know, I don't find myself using it. Maybe you guys do. I think it's useful. I think it's good information. I just don't ever look at it for some reason. If you guys do, let me know. I'd love to know what you think. I can change maybe to something that's more useful. I used to have the VoltiWap, but that's on the live charts, or the Zoom chart, so you can just watch that. So I don't know. If you like this indicator, let me know. If you don't, or if you have suggestions about what I could put here, I'm open to suggestions. There may be some new stuff showing up on the live charts soon, but to tease it a little bit, that's not quite ready yet. Okay, so that's all I've got for today. Look for the development of elasticity tomorrow, but remember to be respectful if the bulls want the market back. All right, I'll see you guys tomorrow.